The United States and China are the world's two largest economies. They are undeniably the preeminent global powers of our time. Their relationship is multifaceted, marked by both cooperation and competition. This complex dynamic has profound implications for the entire world. The way in which these two giants interact shapes global trade, finance, technology, and even the very idea of globalization itself. From the bustling factories of Asia to the financial hubs of New York and London, the reverberations of U.S. China relations are felt everywhere. When these two nations clash, the global economy braces for impact. When they cooperate, a sense of cautious optimism, however fragile, pervades. Understanding this intricate relationship is essential for comprehending the forces that will shape the 21st century. The future of the international order hinges on whether the U.S. and China can find a sustainable path forward. This path must involve managing their rivalry responsibly while also finding areas of mutual interest where collaboration benefits both sides and the wider world. The stakes could not be higher. The U.S.-China trade war, which began in 2018, brought the simmering economic tensions between the two countries to the forefront. The Trump administration levied tariffs on hundreds of billions of dollars worth of Chinese goods. China retaliated with tariffs of its own on American products. This tit-for-tat escalation sent shockwaves through global markets. The immediate impact was felt in industries ranging from agriculture to manufacturing. Soybean farmers in the U.S. saw their exports to China plummet. Manufacturers on both sides of the Pacific faced higher input costs and disrupted supply chains. The trade war highlighted the deep interdependence of the U.S. and Chinese economies. It also exposed the vulnerabilities of a globalized system heavily reliant on these two economic powerhouses. Beyond trade, the U.S. and China are locked in an intense competition for technological supremacy. This rivalry spans multiple sectors, including artificial intelligence, 5G wireless technology, and quantum computing. Both countries see dominance in these fields as crucial for economic competitiveness and national security in the 21st century. The battle for technological leadership has led to accusations of intellectual property theft, forced technology transfers, and unfair government subsidies. The U.S. has taken steps to restrict Chinese companies like Huawei from accessing American technology and markets. China, in turn, has been investing heavily in its domestic technology sector to reduce its reliance on foreign actors. This technological decoupling has the potential to reshape the global innovation landscape. It could lead to the emergence of separate technological spheres of influence, with different standards and protocols. The outcome of this competition will have far-reaching implications for global economic growth, military balances, and the very nature of technological progress itself. Section 4. Supply chains in the crossfire. The U.S.-China rivalry has also brought into sharp focus the vulnerabilities of global supply chains. The COVID-19 pandemic further exposed these weaknesses, as lockdowns and disruptions in one part of the world had ripple effects across the globe. Companies began to rethink their reliance on China as the world's factory. The pandemic, coupled with geopolitical tensions, has accelerated the trend of diversification away from China. Companies are exploring near-shoring options, moving production closer to their end markets. Others are adopting a China Plus One strategy, maintaining a presence in China, while also investing in alternative manufacturing hubs in Southeast Asia, Mexico, or elsewhere. This restructuring of global supply chains is likely to continue, leading to a more fragmented but potentially more resilient global manufacturing landscape. Section 5. Currency clashes and financial tremors. The U.S. and China are also engaged in a complex dance in the realm of currency. The value of the Chinese yuan is closely managed by the Chinese government. This has led to accusations from the U.S. and others that China is keeping its currency artificially low to gain a trade advantage. These currency tensions have the potential to spill over into broader financial instability. A sharp devaluation of the yuan, for example, could trigger capital flight from China, impacting global markets. The interconnectedness of global finance means that any major disruption in one part of the system can have cascading effects elsewhere. Section 6. Developing countries caught in the middle. Developing countries are often caught in the crossfire of the U.S.-China rivalry. Many of these nations rely heavily on trade and investment from both economic giants. They are now facing pressure to choose sides or risk alienating one or the other. This pressure can manifest in various ways, from economic sanctions to diplomatic pressure to military aid packages. The U.S. and China are both vying for influence in strategically important regions, such as Southeast Asia, Africa, and Latin America. This competition has the potential to exacerbate existing conflicts and undermine development efforts in these regions.